Hello, ladies and gentlemen. Welcome to GDMFX European Session Market Outlook. As usual, starting with a short coverage of the main markets out there. Starting with the North American markets, the Dow and the Nasdaq suffered a massive sell-off yesterday based on the high value of the US currency. The Dixie index is up to 98.78 points. Massive sell-off on the stock exchanges all over the planet due to the strong dollar. The wholesale inventories also came better than expected, 0.3% yesterday. The business optimism index was 1.2 lower than previous, and the red book indexes month on month and year on year higher than previous or the same as expected. The JOLTS job openings, 55,000 worse than expected. 4-week bill auction, 0.010% higher than previous, and the three-year note auction, 0.0446% slower than previous. For today, we will wait to see the mortgage approvals in the US, and tomorrow the unemployment reports and the retail sales, along with the business inventories from the calendar. Moving along to the European markets, the German DAX 40 points down yesterday. The French CAC 40 is also 40 points down yesterday. Mario Draghi is delivering his speech as I talk to you right now. Currency pairs, the euro dollar 150 pips down, euro pound 80 down, euro Australian dollar 80 down, euro Canadian dollar 120 pips down, euro Japanese yen 200 pips down, and we have the European New Zealand dollar, European currency versus the New Zealand dollar, 80 pips down yesterday. UK markets, the FTSE 100 lost almost 150 points yesterday and closed at 6,702. The range was almost 180 points. In a parliamentary hearing, the Bank of England Governor Mr. Carney backed up his statements given February in his quarterly inflation report speech. According to the Governor of the Bank of England, should not try tackling the low inflation caused by the fall in oil prices. Carney described the extremely foolish the option to lower interest rates in an attempt to boost inflation that might remain around zero well through the rest of this year. Today, we're going to see the industrial production year on year, also manufacturing production year on year, the this year GDP estimates, and the total trade balance, good trade balance and trade balance non-EU. The data comes as I talk to you right now. Moving along to the Asian Pacific markets, basically the Japanese Nikkei 225 has managed to erase all of its gains and more, with about 400 and over pips negative move yesterday, and has added another 100 pips during the Asian session on the positive side during the night. The machinery orders month on month and year on year showed significant uprise and were anticipated to come out negative. For today, the calendar will show the foreign investments in bonds and Japanese stocks, along with the business survey index, large manufacturing, and the tertiary industry index. Over the last two trading sessions, the Japanese yen has managed to gain over 110 points over the Australian dollar, the British pound, as we said, and also versus the euro. There's a negative move was over 200 pips and just about 50 pips versus the US dollar. The events for China were the retail sales, industrial production, and urban investments year on year. All of those all come out worse than expected and below previous periods with around 1%. The Chinese stock markets went to the north immediately, dragging the Hong Kong indexes as well. The industrial output, investment, and retail sales growth missed analysts' estimates in January and February, suggesting that more stimulus is needed to boost the world's second largest economy. The gross domestic product shows economic growth, which is slowing to 6.28% in the period, the weakest pace since the start of 2009. There was also properties reports from the land down under, from Australia. The home loans were projected to be negative, but the report came out even worse, and the investment lending for homes is, of course, also contracting severely. Take into account the previous measurements for the previous periods. The important events from the calendar regarding the Asian Pacific markets was the inflation data from China, and where the CPI year-on-year and month-on-month came out better than the expectations, while the PPI came out worse. All of the main indexes in China are in the red, along with all of the Hong Kong indexes. Today, the most important thing is the well-anticipated interest rate decision in New Zealand. As I said, we are all filled with expectations for a change there. Moving along to commodities, starting with the S&P 500 index, which had about 36 points range, down to 2,045 points currently. The gold prices dipped to a 4-month low on Tuesday as the US dollar reached 12-year high, triggering a massive sell-off on the global markets. Gold hit about $15 range, trading at $1,160 now. The West Texas Intermediate hit about $2.20 range yesterday, down to $48.80. As we speak, the EA crude oil stock exchange is due for today. Thank you very much for your attention. I wish you a successful trading day. Cheers.